If you have recently moved to Vancouver, you already know the cost of setting up your life here is intense. Between paying your first month's rent, buying groceries, and managing a mountain of new paperwork, your brain can feel exactly like the person in this illustration, surrounded by spinning gears, financial icons, and endless to-do lists. When you are dealing with all of that, it is easy to believe a very common rumor, the idea that if you haven't found a job yet and have made exactly $0 in Canada, you do not need to worry about filing a tax return. The truth is the exact opposite. Even if your Canadian income is a flat zero, filing a return is the only way to trigger thousands of dollars in government welcome payments meant to help you settle in. You might hear that April 30th is tax day and assume that is a deadline to pay up. Think of it instead as the expiration date to claim your welcome payout smoothly. The Canada Revenue Agency, or CRA, currently has funds allocated for your arrival. Filing your tax return provides the formal notification the government needs to verify your identity and start those payments. As a newcomer, filing your taxes provides the government with the necessary details to send your relocation checks directly to you. To get those checks, you use three main tools. As you can see in this graphic mapping out the Canadian tax steps, moving from collecting your ID to submitting online is a simple progression. First is your SIN, or Social Insurance Number. Think of it as your financial ID tag. Next is your T4, which is just an income receipt your employer gives you. Finally, you use NetFile, a secure digital Dropbox to send everything in. When you report your income, the government applies something called the Basic Personal Amount. This is a baseline rule that lets you earn a certain chunk of money completely tax-free. But because you arrived partway through the year, this tax-free limit gets adjusted. This chart illustrates how the system calculates this. It looks at the exact number of days you lived in Canada during the calendar year. Your personal limit builds up block by block, matching your exact time in the country. Filing this information formally activates your available government rewards. For most adults, this includes a quarterly rebate for sales taxes you pay on everyday items. And if you have children under 18, it triggers the Canada Child Benefit, a monthly tax-free payment to help with the costs of raising them. Because you live in British Columbia, filing your return also unlocks a specific local payment called the Climate Action Tax Credit. It arrives 4 times a year and helps offset Vancouver's high cost of living. There is also a special condition called the 90% rule. If almost all of the money you earned globally before moving here came from Canadian sources, you get to claim the full year's worth of those tax credits, instead of the amount adjusted for just the months you lived here. Between the quarterly rebates, the monthly child benefits that can reach hundreds of dollars per child, and the Vancouver-specific credits, these payments add up to a significant amount of extra support for your first year. Before you rush online, you need to know about a common, frustrating loop for newcomers. You cannot register for an online CRA account until you filed your first physical tax return and received a paper assessment back in the mail. You also have to report your worldwide income. The moment you establish a life in Canada, the tax rules apply to all the money you make anywhere on the planet. Look at this graphic showing how different types of financial holdings are categorized. If you still have savings accounts, investments, or rental property back home worth more than 100,000 Canadian dollars, you must declare them on a specific document called a T1135. For tax purposes, the government treats property you owned before arriving as if you sold it and immediately bought it back at its current market value on the exact day you landed in Canada. This establishes the baseline for any future taxes if you sell. If your home country already taxes your income, Canada usually recognizes international tax treaties. These agreements ensure you are not paying taxes twice on the exact same dollar. By declaring your global assets upfront and navigating these early paperwork traps, you prove your file is accurate. That prevents the government from freezing or delaying those valuable welcome checks. If dealing with global assets and tax forms sounds expensive, take a breath. For most newcomers, filing a return is very straightforward and does not require hiring a costly professional accountant. You can use one of the many free, government-approved software programs available online. Or, as this image highlights, you can visit a local community volunteer tax clinic. These are spaces where trained helpers guide you through the process entirely for free. Whatever method you choose, target the April 30th deadline. Hitting that date ensures the government has enough time to calculate your benefits so your payments flow without interruption for the rest of the year. All that preparation pays off in one click. That is the exact moment the government receives your data and your funds are cleared. If this breakdown helped clarify your first tax season, hit the like button, subscribe to the channel, and share this video with another newcomer trying to figure out their finances. By filing your return today, you meet your legal obligations while establishing a reliable stream of income for your new life in Vancouver.